This is Just Amazon on Wednesday, October 31st, 2018. Happy Halloween. Hope this is a treat to everybody. So I think by now you know I'm a numbers guy. I like seeing these moves bouncing around with these lines that have been in here. And so just for fun, I grabbed the high right here, 1623.91 from today, and divided it by the low that we had yesterday at 1476.36, and it comes out to a move up of 9.99%. So almost a 10% move from yesterday to today. Very nice bullish move from that low to the high. I didn't trade it that way. Maybe somebody actually grabbed, bought at the low, sold at the high, almost got 10%. But, what we look at is having a really good risk to reward ratio and just making something repeatable, getting that setup that's really, really nice. And today we got the rally up into the 1578 price that I was looking for from yesterday, but we didn't stop there. We just continued on up, paused at the next line, raced right on through the next one. We're coming up in here into our 1754 price and just danced on that. Actually did kind of a double top here. I'll zoom in on the day. Kind of did a double top, a little bit of a stair step through here, through this nice indecision candle right here, and then just sold off sharply from there. I guess I say sharply, but I mean it came back down into this into the 1578 price. So this line is at 1578.25. The low on this candle was 1578.12, and this was a double bottom. It broke out, broke above the neckline, came back, retested the neckline, and retested the line that we've got in here at 1591.04. Continued up, a stair step here, continued up, stair step here, continued up, and didn't get back up into this line. But the high here was actually a retest of, I believe, this candle. The low was 1615.01, and the high was 1614.55. So pretty close to a retest of that candle, and actually just stayed right in that range, just dancing around on the line in here at 1607. Squeeze form the rest of the day. It would have been really hard to trade this because you would have had to been buying at a low below the line, looking for a move back up above the line. It's just a harder setup to do. You can move your lines around a little bit. You can grab this high wave candle here and call that your low, and then the breakdown of this one that call that your high, and maybe somebody could have traded that. The better trade on the day was either obviously buying the low, buying the open, looking for a continuation at least into 1578, and then just tightening up your stop. Shorting at this high, so we'll look at the options of going short up here after a 10%. I'm rounding, obviously 9.99 rounds to 10. So shorting it after a rally like that, and then buying a double bottom down here on the second low. So those are the key places. So let's look at the options, the puts up here and the calls down here to see what would have played out. But really, we zoom back out and we consolidated here on a really nice accumulation, and we got a really nice distribution up here. Like this is the range. We've got these four lines that we danced around in yesterday, and then we came right back up into these and danced around in those today. Now, we didn't obviously move cleanly from one to the next, but there's enough structure in here that some really nice trades showed up. So the high wave candle here, let's go look at the put. That would have been buying the low or near the low. This is the 1550 put, and the low on this was 594. The price up here, so if you waited for the candle to break out, let's see, I didn't grab what time that was. That was at 9:35. Okay, so you're either buying the 9:35 candle or buying the next candle. Well, the next candle, the low was 760, and the low this one was 594. So already you're looking at $200 risk just to take that trade. Or you're buying, on either of these candles as it's looking to break out, thinking it's going to roll over still that's speculative. That's not really waiting for the setup to come into a price, but it's just the way the pricing worked on the puts in here. So that was a little bit harder to trade, just to have a really good risk reward. You still could have been getting in on that, but you would have needed a larger than $100 risk, and that's what I like to find setups for. Could have done 200, could have gotten in, basically 8 by 6, and held that until you got back up to this pivot on the option. And let's say your price, nice round number 14, and tagged it there. So had you bought at 8, stop at 6, move to 14, that would have been 3R. If it exited here, if you held through a pullback, you were still up in R, and then it rallied and should have exited you on this candle instead. And this candle was the 1040 candle. 1040 was this big candle down. Now, after this candle, I'm sure there was a lot of people thinking, oh, this is going to roll over. This is a, what's it called now? Rest. Is it rest after? No, not rest. Rising, that's what it is. Rising 3, falling 3, something like that, where the 3 candles in between the bookends, go in the opposite direction, and then you kind of bookend the whole pattern with something that's going to continue. Well, it didn't continue. It actually tagged the line here. So you could have been looking for a bounce at this price because it's the low of this range. That's it. Just like we got down in here yesterday, and that was the low of the range. Sorry, it's zoomed way out. Got in here yesterday. We saw the small candle here. We're able to take the, maybe someone took a breakout bullish from that price, at least looking for that to be a good place to bounce. And more or less it did. I mean, there's always a little bit of a leeway of where it's actually going to come in at that price, but it actually did that really nicely today, twice. Once here that you could have been saying, hey, if it comes back down there, I should buy it. And the second time, buying it, follow through with that plan. So let's look at the call at 1040 and the call at 1105. So just 25, 30 minutes apart from each other. So this is the 1600 call, which when it was up here, we got up into the 1620s, came back down into 1578, and put in a low here in this candle at 1773. And then on this candle at 1750. So had you been looking for a bounce, you got it on this candle. Could have been buying the low of this candle because it bounced right off of 1578, and I think it got into 1577. So you could have done this. Maybe again, you would have needed a little bit more than $100 risk to buy blindly there, or you waited for it to come right back down to that price, possibly do a double bottom, and or at least consolidate on this line and then bounce. And so you could have had a setup 18 by 17. Could have had a setup with the low price 1773 by 1673. That would have worked. Now the previous lows in here were at 1866, 1870. So had you been buying those lows, you probably would have been stopped out with $100 risk. Had you put your stop in below the low here, that's at 16, you would have needed probably a $200 R to be able to trade that with a stop down here. And that's also worth noting that the low here, let's see, the low of 1430 at open was way down here at 1565, and then we're all the way back up here at 1578 when we're only a couple dollars higher. So some of the premium got pulled out of this just while it was pulling back. The difference here being $4 on the option, and it was more like 13 or something on the stock. That's some of the theta decay and some of the other Greeks that are just pulling the value out. But anyway, back to the double bottom here. There are plenty of opportunities to play this. So the first one being buying the lows, the next one being buying the retest of that neckline. Now the option says the neckline was probably around the open price here, 22.62. The low on this candle was 21.80. That would have been within $100, so that could have worked. Or you can go with an option that's a little bit further away. So this being the 1600 strike, we were already into 1600. We were looking for a rally back into 1600 from way down here. But if you were in an option that was a little further away, I think the 1625 was a little lighter on volume. Yeah, so the range on some of these candles a little smaller, had some volumes of, down in the teens and 20s. But, again, you could have been buying around $1,000 with a stop at 900, something like that would have worked in here. And then you didn't have as far of a pullback at the neckline. So the high of this candle, the open and the high were 1250. You could have been buying 1250. The low in here was 1250 in this one. So possible that it would have filled, but you don't have the larger range to buy that neckline. And then that continued on up. Could have been exiting here, probably one of these pivots. So somebody got in at 1250, gotten out. They got out at 1750. So that's $500. That's a 5R move, $100 risk. So that could have worked. Going back to 1600, which I just like because it had some much better volume and had a really clean double bottom in here. Now we got a little bit higher in the volume. We were way above the teens and 20s. We got into the 40s, 50s, 30s, in the volume of options in this range. And this could have moved from buying at 18, stop at 17, all the way up into this pivot, or this one, getting out probably around 29. So already that's a move from 18 up to 29. You're talking about a 12R move, with $100 risk. That's 12R. And that took, an hour or so, a little more than an hour and a half to do that, just by looking for a move into the money. So that's key. It got into the money. So that's what's nice about using the 1600 strike. It got into the money here. It was kind of holding right below, got into the money, and continued on up. And the fact that it actually got into this line would have been a good indication that, hey, tighten up your stop, because we didn't get there here on this pivot. Got there here. Tighten your stop up to this, and then it would have been trailed out for a really nice gain. You also had the squeeze that formed in here, but you would have already wanted to be in when you're way down here. But really nice consolidation today. We'll see, looking at the big picture, this is some of our rally. We did get into the 5 exponential like I was talking about yesterday, and there's a long way to go into the 21, but we've got some no man's land again in here, but that's our next group of lines that is kind of consolidated in here. So if and when we get back up there, if it's soon, when it's soon, maybe not, I don't know. I'm kind of speculating it could really gap up, but we had this candle be a bearish retest or a bearish gap and go, continue lower. This could be, some of the retesting still coming back up into the 1665 price. We could definitely get there tomorrow. It's a possibility, but there is some resistance ahead just from some of the lows from this indecision candle, this one, and then we are back into the range of this high wave candle here. So if we continue up, just be careful you've got a really nice risk reward. If we continue lower, I'd really want to see, I think, like a bearish engulfing candle to really bracket this bullish candle to say, nope, not yet, and then for that to continue lower. I think that would be a really nice, clean way to go lower. Similar to this, maybe not as large, hopefully not as large, but if we have a candle that opens near the high, moves up a little bit, and then starts to go lower, I could see this happening again, and that would be continuing the bearish move. Now, it doesn't necessarily, because the 5 exponential is right there, it doesn't have to be engulfing. It could just open pretty even, but if it's got that bearish close below, I'd be really careful for some more bearish move, which is a little scary to say that it could really move lower, but hey, tomorrow starts a new month, so really have to see you know, what's going to happen. So hope you enjoyed this video. Hope it's helped you from losing too much over the course of this month, where we've had a really, really large bearish move. And we'll pick it up tomorrow, next month, with some more looking at AMZN. This is just AMZN. Thanks.